following session is not to be treated as personal advice. MyFX plan provides general advice only. That does not take into account your personal objectives, financial situation, or needs. Trading FX and CFDs involves a substantial degree of risk and should only be undertaken with risk capital. Investors do not own or have rights to underlying assets.
Welcome traders. In this session today with myself, Craig Merchant, we will be covering the Monday morning gap using the MFX gap indicator. Now when we scan the market, what we are looking for is gaps 10 pips and above. So gaps greater than 10. Now as the market opens Monday morning, we are simply just going to drag and drop each pair one after another into the chart until we find a gap greater than 10 pips, like so. GBP NZD, there we go, we have it, a gap of 39.2 pips. So let's take a closer look of how this came into play and how it will play out. The market closes Friday. The market opens Monday. Now we can see that the market opens above Friday's close. We measure the distance between the close price of Friday and the open price Monday morning. Using the indicator, we'll do this calculation for you, and we always trade back to Friday's close and we place our take profit at and on Friday's close. We can see several hours later that the gap has been filled and our take profit has been hit. Now let's look at a trade if the market was to gap down. The market closes Friday afternoon, the market opens Monday and it has gaps down. We can see that the market has opened below Friday's close price. Now we're going to measure the distance between both the close and the open price using the MFX gap indicator. We'll do this for you. And just remember, we always trade back to and place our take profit on Friday's close price. And within just a couple of hours, as we can see, our take profit has also been hit. Just a quick recap when trading the Monday morning gap, that we are looking for 10 pips and above the distance between the close price and the open price Monday morning. This is after you have calculated the spread. So if the gap was to be 12 pips and the spread being 3.2 pips when opening a trade, then that would mean there would be 8.8 pips available. Therefore that trade would be invalid. Now a gap with 12 pips and a spread of 1.5 would still remain 10.5 pips. Therefore the trade would be valid. And just remember, we are always going back to Friday's close. Whether the market gaps up or down is indifferent. Our take profit will always be on Friday's close. That'll be all for today, traders. So thank you for joining me. Until the next time, goodbye.